I think it's been long enough. I think we got to talk about GameStop, AMC, and DogeCoin. So today I'm going to be talking to you guys a little bit about my thoughts. I've been trading for about 5 years and I've seen a lot of different markets now, I guess. I've seen good things and bad things and crashes and booms and all sorts of stuff. And I'm going to give you guys my 2 cents, or at least my opinions on GameStop. Whether you want to see that or not, that is up to you. But we're going to talk about GameStop first. So GameStop is a mall store or a mall outlet store where video games, used and new, I guess, have been sold to kind of retail people buying and who just want their video games, right? And the business itself has been performing really poorly the last several years. Okay, if we gotta really extend this out, because as we'll get to, this thing is on a absolute tear to the upside, or at least it has been recently. So GameStop, though, before all of this hype, has been on a really, really solid downtrend, right? Every day it seems like it's just moving lower for many weeks and months. In fact, GameStop, or GME, was one of the stocks that they used to give out for free on Robinhood at a pretty high rate. I don't think they do that as much anymore because the stock price is over like $300 at this point in time. So when this stock has been going down for many years, it's based on the fundamentals behind this company, which are bad revenues, kind of an old business model. People are now buying their video games and stuff online, right? They're going to Amazon, they're buying things off Steam. I can't even remember the last time I purchased a video game or anything like that in person. It's always through the internet or on Steam or something. So it kind of, on paper, is a pretty rational short. And that is why GME was one of the most, and still is, I guess, one of the most shorted stocks on Wall Street. So GME, large institutions are heavily short. They have big bets against this company, again, because of the fundamentals, because of basically this company for the last many years looked like it was just going to slowly work its way into bankruptcy. So what's all the buzz about now? Well, recently, and actually one more thing I want to talk about on the fundamental side before we get to the craziness that's been going on lately. Let's look at GameStop's revenue. I can't even get this chart to show up in one screen. That's how much it's gone up. You can see it went down. It was down at, I don't know, $5-6. Now it's at 325. Let's look at the revenues for GameStop really quick over time. And this is the fundamental reasoning behind why this, or one of the biggest fundamental reasons for why big institutions and hedge funds were heavily short on this stock. And as we're going to talk about in a moment, people view hedge funds as kind of the big bad guy who are shorting companies. But I'm not going to say I'm impartial to, I'm not on either side, if you will. I am a retail trader myself, even though, I'm not an institution, I'm not working at a hedge fund. But you have to think from an on-paper standpoint, GameStop is kind of, in fundamentals, a pretty solid short, or at least it has been for many years. So you can imagine why a lot of those big hedge funds are heavily short on the stock, betting that over time it is probably going to go down. Now you can see the revenues here. This is going back pretty far, right? This is back in 2010. You can see they made $9.3 billion in their revenues, right? And then all the way now, you can see it's just been on a slow decline, kind of stair-stepping its way down. The most recent one basically being $5.1 billion, which is half almost of what it was back in 2010. So that's a pretty significant haircut on the company's revenues, which is a serious concern for a company going forward. So now back to the chart. Well, why is it up? After all those years of being down, why is it up tremendously? I was watching the stock price as it hit somewhere around 480, and I just could not believe my eyes. People who have been buying this thing are coming from one central place, or at least a big popular place where people are buying this from, is from WallStreetBets. And if you are not familiar with WallStreetBets, I've actually done videos on them in the past. I think it is a hilarious forum for traders. I guess you could call them traders. Sometimes they would call themselves other things. I'm not going to say those words because I don't want to get demonetized or anything like that. But they call themselves a whole array of different nicknames that are sometimes controversial. But the idea is a lot of people on WallStreetBets started pumping the heck out of this stock, and not necessarily pumping in the sense that they're just trying to get other people to buy, but what I mean is they themselves were posting pictures and buying like crazy into the stock, saying, oh, it's going up, I'm putting all my money, or I'm YOLOing, as they call it, as the good old Wall Street boys call it. They YOLO into a stock, saying that it's going to go up. Now, you might ask, well, Nick, it's a fundamental short. The company has not changed that much, right? Well, I believe that the news is there is a CEO change that is believed to potentially turn the things around with the company. But there's also more to this than just fundamental. So I'm going to scrap even the reasoning behind that, because I think the biggest reason, it is my opinion, it's pretty speculative out there. There's lots of different opinions floating out. So here's mine. I think that it's the predominant thing, which is, I guess it's not even an opinion. It's pretty clear. It's a very, very strong short squeeze on this stock. And what that means is that we talked about those hedge funds who have been shorting this company and have been making money on the short side for a very long time. And then you've got all of these Wall Street bettors who, with an army of I think it's 2.5 million people who follow the forum on Reddit, right? When you have that sort of number of people and they seriously get truly invested in buying into this company, almost with the intention of busting the shorts, which is what we're going to talk about. When you're busting the shorts, what that means is that all of those institutions, all of those millions and billions of dollars that are bet short on GameStop, which, by the way, I believe it has an over 100% short interest. That's another definition for another day, but it is possible to have over 100% of the stock interest short. So that's what's going on. You've got these giant funds versus the little guys who are trying to bust the short. And to say to nothing else, the most interesting thing to me here is the power of WallStreetBets, the power of the internet, and the power of that many small people coming together to actually contest with the big boys, the hedge funds, who have been dominating this industry for a long time. So with that said, they basically have pumped this stock. They've shot this stock up. And with that, every time it's gone up significantly, that's causing the hedge funds to have to cover the shorts. Their shorts, right? Which, like I said, when they've got these giant short positions and they have to cover and they're getting the shorts busted, quote unquote, the idea is that they have to cover back their shorts, which means they have to buy back their shorts, which causes more buying. So you have this fuel from an internet forum / meme page, and then you have big short interest that's having to close out because they're just absolutely overwhelmed, right? They're getting margin called, that sort of thing. It's causing the price to skyrocket higher. Now, this is the part that I get interested in, because now that we're seeing all of these funds, I believe we've had a couple different funds already that have released that they've been basically closed out of their positions because of these massive runs to the upside caused by the good old Wall Street boys, right? Or at least that's what we know as far as a dominating force. There could be other forces at work. I'm not saying there is. I'm not saying there isn't. Who knows? Maybe WallStreetBets is a puppet for something else. I don't know. I'm just sharing my opinion here in this video. So where do we go from here? Well, once the shorts cover, where are we left with? We've got a whole bunch of retail traders who have YOLO'd into a stock. And I've seen posts on WallStreetBets talking about people saying, "Oh, well, is it time to sell? Is it time to sell?" Almost as if this was never an investment for them. It was a YOLO trade, which again, it's their money. They can make their own decisions. But the idea is that when you have people YOLOing into a stock, that might not be a sustainable sort of buying method, right? You run out of buyers and then the shorts cover and then you have nobody else who's going to absolutely bust through the highs continuously, right? Unless, I guess, more people get short. But again, you're talking about long-term shorts that have gotten busted, and that's a lot of money that has to exchange hands. So once that money dries up, who's left holding the bag, if you will? Who's left holding the long positions there? Well, it's the retail guys. It's the WallStreetBet guys who hold, or other people who get sold into the idea of, okay, this company is going to the moon. When fundamentally, like I said, it's still, in my opinion, not a great company, okay? And I'm not saying that to be a mood killer or anything like that. I'm not trying to be a bear just to be a bear or just to be a contrarian. This is just my opinion on the company. I don't love the company. I don't think the evaluation is fair at these prices. I think a lot of people would probably agree with me. Maybe you don't. Maybe you're like YOLO to the heavens and shut up, Nick, you're an idiot. I understand. Okay, that's fine too. This is my opinion. You have yours. I'm not trying to step on any toes. I'm just saying, from what I see here, this looks like an unsustainable sort of upward movement that probably will come down. It probably will reverse hard, as we've already seen. We've seen some. Look at this price action. That sort of price action looks like it is driven by emotions. And emotional trading, as we know here on the channel, usually doesn't end well. So let's look at two more really quick. Let's talk about AMC. A lot of the same story. You can see a lot of absolutely parabolic movement to the upside. Now, AMC is a movie theaters company. I've been to AMC myself many times. I'm sure a lot of you guys have as well. AMC, they operate movie theaters. And of course, during the pandemic, they've had a hard time. They've had some help, I believe. But the overall idea is that it's a similar thing. Lots of short interest on this company long term. You can see, even before the pandemic, they were on a downtrend, right? And we can actually go look at that data again. Let's go to the AMC, and you can see. Whoops, I messed that up. Is it not going to let me do AMC? AMC. There it is. Okay. So we go here. You can see a little bit different though here. And this is where things get interesting to me because you can see that this company, although it's been on a downtrend in the stock price, the revenues over time have actually been decent. They're not degrading massively. Of course, you're going to see these big dips here in 2020, or I guess last year in 2020 when we had the whole world shut down. People are not going to go to theaters as much. So that makes sense. But I guess the idea here is that it's a little bit different in my view because although it's still being kind of a meme stock and people are buying it as a kind of a hype thing within WallStreetBets, it is another popular one that they're watching. I think that the company itself I personally am not necessarily a giant bull on this, but not as bearish as I am on GameStop. Okay, because AMC, they make money. At least they have revenues that have grown. They've been very, very slow growth, but it still seems to be in a decently overall improving situation. And again, once things recover from the whole pandemic, I would imagine that this company probably does a good job at bouncing back. So that's my view on it from a fundamental standpoint. But again, very, very much a short interest stock. And with this pop, a lot of people probably have to cover, which is causing this thing to go further, right, to get pushed higher. When you get people who get margin called, they have to buy back their positions, shooting the price up further. Now, I will say though, this price action also looks like some highly emotional trading that is just back and forth and wild. So with that said, I probably wouldn't be buying this stock in these areas either. However, this might just be a good opportunity to watch AMC. And hey, if it drops down to a level, then I actually might be interested in looking to buy a little bit of AMC, anticipating a potential recovery post-pandemic. So, that's the way we could potentially look at this thing. But again, a lot of short interest popping it up and people on Wall Street getting really, upset that their shorts are getting annihilated. So that's another debate is, Robinhood and TD and all these different platforms. Some of them, I guess, I don't think TD shut down or was frozen, but some of the other ones like Webull, I use Webull, and it was frozen for a while. There's all these sort of debates going on too with Robinhood and not being allowed to shut down stocks or pull stocks off of their thing, which they did with GameStop and AMC. They weren't allowing people to trade on that for a day or so, which that's a big deal. And there was a lot of debate and probably going to be some big lawsuits on that as well. So anyways, the last one I want to talk to you guys about is DogeCoin. And this is not a joke. I'm serious. DogeCoin went up in a single day. It went up 330%. And then in the next day at its peak, it went up another 123%. Total from this little rally to the top, it was up almost 900%. And my friend Frank, who does some work inside of the A1 trading community, he bought like probably, I think he bought like maybe $50 of this thing as kind of a joke when it broke past this high. So on this breakout, he bought some, right? He bought like $50 worth and he held it. And he was like he was all happy that he had gotten that. And he didn't sell it. He held on to it. Just, he said, well, it's $50. If it goes up, awesome. If it doesn't, we'll see. And then it just, like, this looks comical at how much this you have to like scroll significantly to get to the top of this thing. I'm sitting here like working hard to get to the top of it. So he was up 700% on his investment when he sent me a screenshot, and I was just shocked. So I think his I don't know. He showed me he had like $700 in profits, which I know is not a giant amount or anything like that. Maybe to some of you guys it is. To me, it is a good amount of money, of course. I'm just saying, like, you have to also realize that that's $700 of profit that's coming from a very small amount of money invested. So anyways, the reason I bring this one up is because this is another scenario where people are memeing into something and we're seeing the internet just go crazy over something. And I want to talk about a dangerous pattern that is present in these sort of situations. Now, of course, I'm not trying to be the bad guy. I'm just trying to caution people. If you're just chasing with the herd, you're bound to get burned. It's just how trading works. FOMO is a very, very dangerous habit that a lot of people get involved with. They see something that's going skyrocketing. They think, oh, it's going to go to the moon. And you can see all the people who bought up here, they're in trouble. They're in pain right now. Because if you bought up here, right, let's just pick a random spot. If you bought up there, you are currently down 50% of your investment. You lost half your money already. And again, that's a dangerous sort of practice because people who get involved in these Reddit pages, the dangerous side of it is that you got to know what you're going to risk, right? Because I know a lot of times it's for the memes, it's for the jokes, and it's fun. But what's not so fun is when people get involved with it and they put on money that they can't afford to lose. So I would caution you, if you're interested in doing this stuff, if you're doing this stuff yourself and you're having fun with it, please just consider only risking what you can't afford to lose. Rationalize it with yourself or talk to yourself and say, hey, if I lost every penny that I did this with, would it be okay? And if yes, and you're willing to take that, then that's your decision. But again, I know it can be very dangerous and very bad for people who get up on the wrong side of this. Anyways, guys, that's all I've got for today. Those are my thoughts on these crazy companies and cryptocurrency that have been moving like wildfire. So I figured I would just share my thoughts for what they're worth to you. I hope you enjoyed. Have a great rest of your day. We'll see you back in the next one.